Most military members retire without the wealth they deserve, despite all their service and sacrifice to our country. And today, I want to show you a way to change that and know that it doesn't require getting out of the military or having a huge bank account. My name is Josh Villarreal, and I created a multi-six-figure business while being broke active duty in the Navy, and now I'm a multi-millionaire helping military members do the same thing through real estate and business on this channel. What changed? Well, I discovered a wealth building system designed for military members that leverages benefits you have access to. Benefits that most service members never take advantage of. So, in this video, I'm going to compare all your options in 2025. And then I'll show you why one particular path is outperforming everything else right now. Let's look at the options you have right now for building wealth as a military member and really analyze which ones actually make sense in today's economy. Option 1, side hustles and online businesses. This is something that I know firsthand. Creating additional income streams outside your military pay is tempting, right? I mean, who doesn't want extra cash? The reality is, I tried it all. Drop shipping, e-commerce, digital marketing. I went through all of it before finding success. And let me tell you, these ventures cost me thousands of dollars and years of trial and error. Now, there are some pros here. The income potential is basically unlimited. There's no ceiling on what you can earn. You can start with minimal investment and you develop entrepreneurial skills that transfer to other wealth building ventures. Plus, you can make money using your specific skills and interests with the potential for passive income streams over time. But the downsides, there's quite a few. First, it requires a ton of time investment while you're on active duty. The returns are uncertain and the failure rates are extremely high. Over 90% of online businesses fail. Most need 1 to 2 years of consistent effort before you see any meaningful return. This is true for me as well. My first year, I made $6,000 with $4,000 in expenses. That's only $2,000 in profit for 12 months of work. I personally lost thousands in drop shipping, e-commerce, and other ventures before finding my success and making great money. And it's really difficult to scale while maintaining your military duties and family obligations. Not to mention that market saturation makes things pretty difficult to stand out. Option 2. Traditional stock market investing. This is buying stocks, ETFs, and mutual funds outside of your TSP. The reality here is that historically, you're looking at an average return of about 10%, but with high volatility. The pros are that it's highly liquid. You can sell assets quickly if needed. There's low barrier to entry with fractional shares and commission-free trading. It's passive and requires minimal ongoing time investment. You get those historical average returns annually over long periods. And it's easy to diversify across sectors and company sizes. But the downsides? It takes decades to build significant wealth without substantial capital up front. You need substantial capital to generate meaningful passive income. I mean, at 10% returns, you need $1 million liquid invested to generate $100,000 annually. There's high volatility that can lead to emotional decision making and poor returns. Plus, you get no leverage. $10,000 invested only gets you $10,000 in stocks. And there are no tax advantages without specific account types. And you can't force appreciation or increase returns through improvements. Option 3, cryptocurrencies and alternative investments. This is Bitcoin, Ethereum, NFTs, and all those other crypto assets. The reality is that cryptocurrency prices are notoriously volatile. They fluctuate dramatically and rapidly, leading to potential big losses for investors. The pros are that there's potential for explosive short-term gains. There's growing institutional adoption that provides some legitimacy. It can serve as a hedge against inflation and currency devaluation. Blockchain technology offers innovative investment opportunities, and having lower correlation with traditional markets can aid in portfolio diversification. But the downsides are significant. It's largely unregulated, which creates additional risks. There's extreme volatility. You can lose 50% or more of your value in weeks and even days or hours. It requires deep technical knowledge to navigate safely. There's no intrinsic value or cash flow. It relies purely on greater fool theory. And there's high risk of scams, hacks, and total loss of investment. For me, I do own cryptocurrencies myself, but I'm not betting it to make me super wealthy. It's just more of a hedge. Option 4, my favorite, real estate investing through VA loans. This is using your VA loan benefit to purchase property with $0 down. This is exactly how I went from being a broke E5 to owning multiple properties and developing a $20 million apartment from the ground up. The pros are pretty powerful. You leverage military benefits you already have access to, so you build wealth with minimal starting capital. You generate wealth through 4 simultaneous mechanisms, which I'll break down in just a minute. You create passive income potential while still on active duty. It's a hedge against inflation, as rents and property values typically rise with inflation, and you can get started with as little as $6,500, just like I did as a 23-year-old E5 in the Navy. What are the downsides? It's more complex than simply investing in stocks or the TSP. It requires basic knowledge of real estate principles. Properties do need management, either by you or a property manager. It's less liquid than stocks or crypto, which means you cannot sell it quickly, at least 30 to 60 days. And there's potential for unexpected maintenance costs, and some markets perform better than others. Now, if you're watching this and thinking, real estate sounds great, but I don't know where to start, I understand completely. I was in your exact position not long ago. That's why we created Mission 333. It's our initiative to help military members acquire 3 rental properties in 3 years and inspire 3 of their fellow service members along their wealth journey. We've already helped hundreds of military members build substantial wealth this way. If you're serious about getting started, my consulting firm can actually do this with you and for you. There's a link in the description below. But for now, let's dive deeper into why real estate is the absolute best wealth building strategy for military members in 2025. Now let me show you why real estate through your VA loan is the absolute best wealth building path for military members right now. Advantage number 1. The 4 wealth builders of real estate. Unlike other investments, real estate gives you 4 ways to build wealth simultaneously. This is crucial to understand. When you invest in real estate, you're not just betting on one way to make money. No, sir. You've got 4 engines working for you at the same time. First one, there's appreciation. Unlike stocks that can crash overnight, real estate in strong markets has shown consistent long-term appreciation. In markets like San Diego, property values have historically doubled every 10 years. This means a $500,000 property could be worth $1 million in 10 years' time. $500,000 in wealth created while you're sleeping without doing any additional work. And guess what? If you use the VA loan, that is $0 down to make $500,000. Absolutely nuts. Second, there's cash flow. When structured correctly using co-living strategies, your properties generate monthly income beyond your expenses. This isn't theoretical money. It's actual cash hitting your bank account every month that you can use to invest, further pay down debt, or fund your lifestyle. I've personally turned my first duplex into a cash flowing machine, generating over $5,000 monthly. Third, there's principal paydown. Every month, your tenants are essentially buying the property for you, payment by payment. While you might not feel this wealth building mechanism day to day, each payment increases your equity automatically. Over a 30-year mortgage, this alone can build hundreds of thousands in wealth without you contributing an extra dime. And fourth, there are significant tax benefits that can offset your W-2 income. Real estate offers some of the most powerful tax advantages available to any investor. Through depreciation, you can legally offset your cash flow and potentially even your W-2 income, meaning You can pay significantly less in taxes while building wealth. I've seen military members completely eliminate their tax liability while having positive cash flow. Try doing with stocks and crypto. Advantage number 2, specific military benefits in real estate. As military members, we have unique advantages that civilians don't have access to. These are game changers when it comes to building wealth through real estate. First, there's BAH, your basic allowance for housing. This is literally the government paying you to own real estate. This tax-free allowance is designed to cover your housing costs in your area. When you use your VA loan to purchase a property where the mortgage is less than your BAH, you're effectively getting paid to build equity. In many markets, your BAH can fully cover a mortgage on a multi-unit property, allowing you to house hack and keep the rental income from the other units as pure profit. This is one of the few instances where the government is actually helping you build wealth instead of just covering expenses. Then there's the VA loan itself. The VA loan is arguably the most powerful wealth building tool given to military members. Yet, only about 6% of military members in the past 5 years actually use it effectively. With zero money down on properties up to 4 units, you can actually control assets worth $800,000 or more with minimal cash out of pocket. Conventional investors need 20 to 25% down, meaning they need $160,000 to $200,000 in cash for the same property. You get access to $0 down. This benefit alone can accelerate your wealth building timeline by 5 to 10 years compared to civilian investors who would need to save for years just to get started. Third, there's no PMI. Unlike conventional loans, you don't pay private mortgage insurance. Even with $0 down, PMI typically costs between 0.5% to 1.5% of your loan amount annually, which means on a $500,000 property, civilian investors are paying $2,500 to $7,500 per year in PMI until they reach 20% equity. With a VA loan, you completely avoid this cost from day one, even with $0 down. This savings goes straight to your bottom line, improving your cash flow and reducing your expenses. Over the first 5 to 7 years of home ownership, this can save you $15,000 to $50,000 that you can reinvest into other properties, or you could spend it on improvements to increase the value of the property. And finally, there's PCS flexibility. You can keep properties as rentals when you move, unlike civilians who might need to sell their home when relocating. Your military career actually creates a unique advantage through PCS moves. Each time you receive orders to a new duty station, you can keep your previous property as a rental and use your VA loan benefit again at the new location. This allows you to build a portfolio of properties across different markets without selling. I've seen military members acquire 3 to 4 properties over their career just through normal PCS moves, creating a nationwide portfolio that would take civilian investors decades to build. This accidental portfolio can generate hundreds of thousands of dollars in equity and tens of thousands of dollars in cash flow by the time you separate. Advantage number 3, 2025's unique market conditions. The current market is particularly favorable for this strategy, and here's why. Interest rates are trending down after reaching nearly 8% in 2023. This means financing is becoming more affordable, improving cash flow and prospects on new purchases. Housing inventory remains tight, driving appreciation in key markets. Rental demand is at an all-time high, with 14 million renters making less than $35,000 a year, creating huge demand for affordable housing solutions like co-living. There's what I call the Volcker effect. History shows rapid appreciation follows when rates drop after being high. This happened in 1980 after Paul Volcker's high interest rate policy, and we're seeing similar conditions right now. What I'm sharing here are strategies that have helped hundreds of military members build a real wealth. In my consulting firm Simple Wealth Academy, we've developed a complete system for military members to build wealth through rental property. Whether you decide to pursue this on your own or with guidance, real estate should be a cornerstone of your wealth building plan as a military member in 2025. Let me break down a real example of how powerful this strategy is compared to other options. Let's look at the $500,000 property purchased with the VA loan. You put $0 down compared to $100,000 down as a civilian would need for a conventional loan. Your monthly payment is around $3,000 to $3,500, including taxes and insurance. Your BH covers most or all of this payment in many areas. Now, let's look at the wealth building math. With appreciation at a conservative 5%, you're getting $25,000 a year in equity. Using the co-living strategy I teach, you can generate $15,000 a year in cash flow. Through equity paydown, you're gaining another $7,000 a year as your tenants pay down your mortgage. And the tax benefits potentially offset your W-2 income through depreciation, putting even more money into your pocket. That's a total annual wealth creation of approximately $47,000 of passive growth on a property you control with none of your money down. Now let's compare that to other options. With a side hustle, you would need to clear $4,000 a month in profit consistently to make the same amount. That's not only difficult to achieve while being active duty, but it requires constant time and effort. With traditional investments, you would need $470,000 invested to generate the same returns at 10%. That's nearly $500,000 you would need to save up first. Here's exactly how to implement this wealth building strategy in 2025. Step 1, leverage your VA loan correctly. First, find an actual VA loan expert. Here's a little insider tip. Ask them about the 26-7 to test their knowledge. This is the VA lending handbook. And if they don't know what you're talking about, they're not really a VA loan expert. Get pre-approved before house hunting. This not only shows your sellers you're serious, but it gives you a clear budget to work with. Make sure you understand all costs beyond the mortgage. Taxes, insurance, and maintenance. These affect your cash flow calculations. Step 2, target the right type of property. Look for multifamily properties, 2 to 4 units, that can be house hacked. This means you live in one unit and rent out the others. Focus on properties with unutilized space, potential for co-living conversions. Think dining rooms, large living rooms, or bonus spaces that can be converted to additional bedrooms. Consider properties where ADUs, accessory dwelling units, can be added later for additional income streams and a bunch of wealth creation. Step 3, implement the co-living model. Convert unutilized space like dining rooms into additional bedrooms. This can often be done to $1,000 to $3,000, but the thing is, it adds such significant rental income. Then furnish the whole house and rent by the room. This typically generates 2 to 3 times more income than renting to just one tenant for the entire home. So target military members, healthcare workers, and educators as tenants. They typically have stable income, good credit, and longer-term housing needs. Step 4, rinse and repeat with additional properties. Use your VA loan for subsequent properties when you PCS. As mentioned earlier, you can keep building your portfolio with each move. Consider the cash out refinance strategy to access equity tax-free. This allows you to pull cash out from your properties to invest in more. Scale by adding ADUs or using other creative financing methods as your portfolio and experience grows. Now, I know what some of you might be thinking. Let me address the most common objections I hear. Objection number 1, real estate is too risky. The real risk is doing nothing and relying solely on military pension. The military pension is great, but it's rarely enough to provide the lifestyle most people want in retirement. VA loans have been the safest loan on the market for the past 15 years, with lower default rates than conventional mortgages. With the right education, real estate is actually less risky than most investments because you have more control over your outcome. You can improve the property, adjust rental strategies, and make decisions that directly impact your returns. Objection number 2, I don't have enough money to get started. That's exactly why the VA loan is so powerful. You can get started with $0 down. I started with just $6,500 out of pocket to leverage an $800,000 property. This included the closing costs. You need far less capital than any other wealth building strategy. Even the cheapest stocks require you to put up 100% of the value. With real estate, you can control assets worth 10 to 20 times your investment. Objection number 3, I don't have time for this while being active duty. You can always hire property management. I did this on my first property when I realized trying to do everything myself wasn't sustainable. And I almost got in trouble for doing the wrong thing. The systems I teach allow you to automate 80 to 90% of the work. Once it's set up, the ongoing time commitment is minimal. This is a long-term strategy. A few hours of work now creates years of passive income later. It's one of the best returns on time investment you can make. Objection number 4, the market is too expensive or too competitive. The current market actually presents a unique opportunity for VA loan users. As conventional buyers get priced out due to higher rates, VA loans become more attractive to sellers. Inventory is increasing in many markets, giving buyers more options than we've ever seen in recent years. The co-living strategy works even in expensive markets like San Diego. In fact, higher priced markets often yield better returns with this approach because the gap between traditional rents and rent by the room rentals is larger. The traditional path to wealth doesn't work for military members anymore. In 2025, real estate through your VA loan is hands down the most powerful wealth building tool you have access to. If you're ready to start building real wealth as military members in 2025, here's what to do. First, watch my beginner's guide to VA loans video. There, I give you a complete walkthrough of how to use your VA loan benefit properly. Next, consider joining us in Simple Wealth Academy. This is our community of military investors who are already implementing these strategies successfully. We've helped hundreds of service members just like you take control of their financial future through real estate. The knowledge, support, and networks you'll gain will accelerate your wealth building journey significantly. The people who take action now are going to be miles ahead of everyone else in the next 5 to 10 years. So don't wait. Don't put this off until after your next deployment or until you have more time. Thanks for watching, and I'll see you on the next one.